Hey, what's going on, team? It's Ricky with Tactful Solutions. Hope that you guys are all having an amazing day. So there is no question that when it comes down to trading, indicators can become a big part, especially if you're a technical trader, which means that you trade off of patterns. There is no questions that patterns tend to repeat themselves, but again, they don't always have to. So in this video, we're gonna dive into my screen and I'm going to explain, based off of my experience and my opinion, why I think indicators are a great reference to go off of when it comes down to taking a trade, but you never want to solely rely on an indicator. So let me know what you think at the end of the video, and I hope you learned something new. So I actually wanted to give you guys some examples on a series of different indicators that I use, how I find them to be effective if you already do not know how to use them, but also the overall idea that indicators, in my opinion, have been a great reference. And what I mean by that is they're really good when technicals are taking over, but there is no question that when news or fundamentals come into place, that these indicators don't become as useful. And I think maybe a lot of you guys can agree with this, where there's a consistent pattern, there's a consistent flow of direction, but then all of a sudden, for some reason, there's a break of pattern, and then these indicators no longer begin to become relevant. And there's nothing wrong with what you're doing. You just need to understand that when, again, fundamentals or overall news come into place and overall direction begins to take over, that it doesn't sometimes matter how overbought something is. It doesn't sometimes matter how oversold something is, because again, if there is a reason behind that sell-off, or if there's a reason behind that push, it will most likely continue until that demand falls off. So I wanted to give you real-world examples and show you on my screen. So today is January 13th. It's Monday, and I'm not too sure if I'm going to be uploading this video today, but I did pretty well today. So I closed out all my positions just like I normally do. I made $589 within about 2 to 2.5 hours of trading today. I traded DGAS, and one of the things that I wanted to share is that we were seeing a very consistent flow and a very consistent direction, meaning that natural gas, after it hit highs of 2.226, it broke below the SMA line, it broke below the middle VWAP, and we began to hold below this SMA line. So we could see that, again, if it's trading in between the middle and bottom VWAP. So if you guys aren't familiar with the VWAP indicator, I have default settings. So this is the middle VWAP, which is the purple line, the top VWAP line, which is the red line, and then the bottom VWAP line, which is this gold or yellow line. When something trades in between the middle and top VWAP, that begins or is some form of indication of an uptrend, meaning that if it's trading between these two, it's most likely pushing up. If it's trading between the middle or bottom, it's most likely descending. So what I like to do is, because of that, is I like to focus on growth, right? If you want to make money, you want to put your money into something that is showing signs of growth. So I normally like to focus on things that are trading between the middle and bottom VWAP. I trade ETNs and inverse ETNs very often. So when I began to see that the market was about to open and natural gas was trading in between the middle and bottom VWAP, meaning that natural gas is selling off, so it's a downward direction, the inverse ETN of then UGAS is DGAS, meaning that DGAS goes up when natural gas goes down. Very simple correlation, right? So as long as this thing continued to try to push up, got rejected by the middle VWAP, got rejected by the SMA line, and then continued to sell off, the more that then DGAS continued to then push up, right? And then push up and then push up. But then guess what happened? It began to consolidate, it found a resistance, and then it began to trade below the middle VWAP and that overall SMA line. And this is something where, again, there wasn't huge news, there wasn't much fluctuation, but one of the things that I've seen a lot of people sometimes rely on is maybe the MACD or maybe the RSI. And what I mean by that is it's more when momentum comes into play, when there's an aggressive sell-off or when there's an aggressive push. The best example that I can give you is for a lot of my commodity traders out there, how many of you guys have ever traded a natural gas report, right? And it doesn't matter how overbought maybe natural gas is, but if a natural gas report comes out and it's in favor of natural gas, therefore it doesn't matter how overbought natural gas is, if it's in favor, it will most likely continue to push up. But why? If the RSI is overbought, or why if the MACD is overbought? Because again, the demand is so great and there's a reason behind that action. And that's what you need to understand, is that technicals and indicators can only do so much. But when fundamentals or when news actually begins to take over, then that's where the demand begins to take over the overall technicals. And we kind of have to go with the idea that the trend is your friend. And one of the things that we always love to remind our traders is the overall idea that it doesn't matter how overbought something is, it doesn't matter how oversold something is, regardless of the MACD, regardless of the RSI, there is no question that even if something is super overbought and super overextended, it can continue to uptrend. I think Tesla is a perfect example, right? There's a lot of hype, there's a lot of momentum with Tesla right now, and all this news that continues to support it. It pushed up 9.77% today, right? Huge day. And look, it just made new highs on this 180-day chart. But look how overbought it is. Look how overbought it's been, right? It's super overbought, super overextended. But again, news and overall fundamentals continue to be placed. Volume and demand continue to show up, right? And therefore driving the demand of overall Tesla and breaking every resistance level. So again, technicals are great, but then you guys might be asking, why is the RSI not a good indicator? Why is maybe the MACD not a good indicator? Again, indicators are great to use as a reference. So if you see an opportunity and you want to refer to maybe an indicator to validate it, great. At least in my experience, I never want to take a position solely off of that indication, right? Because we could see multiple times that the RSI has been very overbought, or the MACD is showing that it's overbought and due for a reversal. But guess what happens? It pulls back, it then finds its support right away, and then it continues to rally. Why? Because again, fundamentals or overall news continue to take over. Technicals and indicators are great. But what I see in my experience is most important is overall direction, right? With the idea that the trend is your friend. And technicals do play a role in that, but I think it comes down to the more of the open mind that, again, when something continues to push up, we have the idea that, hey, something is overbought and it is due for a pullback, but it doesn't have to. And I just want to make sure that we all understand the idea behind something and not just be hopeful traders and enter in a position too early and hoping that it begins to sell off, so we can then begin to make money, and instead actually wait for confirmation. So there's two things that I like to focus on, and I do like to use indicators. I do like to use the MACD. I do like to use the RSI. I do like to use the EMA line, and it doesn't matter what indicator that you use. There's not one indicator that's 100% accurate, and there's nothing wrong with that, right? It just means that we have to be that much more selective and that much more patient when it comes down to waiting for true confirmation and really allowing that opportunity and that direction to present itself. So if you're someone that really wants to short Tesla, are you really going to buy Tesla right now as it continues to break every single resistance level? You might, right? You might be someone like that. And guess what? If you were someone like that when you thought that it was overbought here, guess what? Well, now you're down about 26%, right? And it's very unfortunate because you put yourself, again, in a very hopeful position. But what's one simple little step that you can do to not put yourself in that position? And it's, again, if you're so certain that something's going to happen, why not just wait for it to actually happen and then take action? It's having a reason behind what you do and not hoping it actually does it. I think maybe a lot of the people that were focusing on UGAS, right? As UGAS continue to sell off and sell off and sell off, right? Especially during the winter months, everyone expected, right, UGAS and natural gas to recover and to begin to rally, but inventory levels were too high. There was a reason on why it continued to sell off. We were having cold months, but inventory levels were just way too high. Therefore, the overall price of natural gas continued to sell off. So then it comes down to the idea, there was no question that, UGAS was super oversold. There was no question that natural gas was super oversold. But just because something is a good deal doesn't make it a good buy. Just because the RSI or the MACD is referring it to be a little bit more on the oversold side does not mean it has to reverse. In my opinion, every indicator out there is not 100% certain. They're great to use as a reference to have a better edge on the market, but it's never something that you solely want to take a position on. In my experience, I think one of the things that I really like to wait for, and it's not even 100% certain, but it's confirmation, right? You wait for confirmation, you wait for true direction, and when that presents itself, even then, things can still go south, but that's why we have some form of risk management in place. But one of the things I just wanted to empower you to do is to understand that, again, indicators are a great way to have an edge on the market, but it's never something you want to solely rely on when it comes down to taking a trade. All right, team, hope that you guys enjoyed that video. Don't forget to join our free investing group. That's going to be that first link down below. We're the largest one on Facebook, but just to give you a little bit more of an incentive if I earned your thumbs up, right? So if you guys give this video a thumbs up and comment down below your goal for 2020, I'm gonna be selecting 3 random people and actually sending them some sour strips since I have a couple of them laying around. So again, don't forget to drop a thumbs up if you feel like I earned it. Don't forget to share your goal for 2020 in the comment section. And if you haven't already joined our free investing group, that's going to be that first link down below. Like always, team, let's make sure that we end the year on a green note. Take it easy, team.